Good morning, and thank you for having me on your show. We're positive on the outlook for relative performance from European markets, a combination of better, more aggressive and cohesive policy making, better COVID control, a pickup in growth in absolute and relative terms. The markets have underperformed year to date, the valuations are reasonable, and they're still underheld. But we do think that you need to be very selective within the markets.
And Jeffrey, I think a lot of people felt similarly in the immediate aftermath of the agreement around the European Recovery Fund that this was Europe's opportunity to outperform. Europe has done a better job than other parts of the world in managing the outbreak, and now we've got this solidarity to the extent that we've never seen before. Yet, in the month of July, European stocks underperformed the U.S., and now there's a lot of doubt, it seems, coming through. Investors not truly convinced that this is the game changer that many had initially thought. I mean, what's your take? Are you not concerned about the implementation risk around this recovery fund? You know, not concerned that this may actually just replace national spending?
No, we don't have that concern. We think that Europe is undergoing a perception change from investors, and that will happen gradually, given the prolonged period of underperformance prior to the recovery fund. We think that the recovery fund is critical in two ways. It supports the periphery, and that lessens the Eurozone breakup risk and reduces European risk premia. And that, in turn, will encourage flows into all European assets. And with the recovery fund, we had the solidarity across the leadership of the EU27 in putting the recovery fund in place. The second thing that's positive about the European Recovery Fund is that it's part of the EU 7-year budget. And because of that, the budget becomes more than just a distributive instrument. It becomes a fiscal tool with borrowing capacity. And that means that Europe, over the coming months, will see a larger investor base in safe sovereign bonds, and that will enhance the role of the euro and encourage flows into European assets.